topic for today is payroll deductions. What things are deducted from payroll? Well, first you need to understand the difference between your gross pay, what you make in total as a combination of your wages or salary, and your net pay, which is what you actually get to take home at the end. The difference between those two numbers is your deductions. It's the items that are taken out of your paycheck before your paycheck is actually sent to you. So what things would a company deduct from its employees' payroll? Well, state and federal income taxes. We have to pay taxes on the money that we make. Insurance premiums. Most companies have some kind of employee-sponsored health care program. It's also possible that through your employer you'll have dental coverage, optical coverage, and life insurance. So all of the premiums, the small amounts that employees are required to contribute towards this coverage, are taken directly from pay. There's FICA taxes, which stands for Federal Insurance Contribution Act. It is the act that created both Social Security and Medicare. And to fund those two things, employees have a portion of their paycheck taken away each period to finance Security and Medicare. Some companies will offer their employees a retirement plan. They'll say if you put in 3% of your paycheck, we'll match. Well, any employee retirement plan contribution gets deducted from your paycheck, and companies would have to deduct it from their employees' payroll. It could also be things like charitable donations to your local YMCA, the Red Cross, etc. And then, unfortunately, some of your employees may have garnishments. Someone may have a claim against their wages because the employee owes them money, and it gets taken out of the paycheck before the paycheck that's left over, the net pay, is handed to your employee. How do state and federal income tax deductions work? We have a progressive system in the United States, which means the more you make, the more you pay in taxes. On the left is the federal bracket. It's kind of hard to read, but I'll explain the best I can. For single individuals, the first $9,875 that you make each year is taxed at 10%. For every dollar that you make between the $9,875th and the $40,125th, it gets taxed at 12%. The next tax bracket is 22%. The next tax bracket is 24%. So the more money you make, gradually, the amount that gets taken out for the amount of that paycheck that's going to go towards taxes keeps increasing. The same thing happens in New York State as well. I have their tax brackets over on the side from the year 2019. Again, the more money you make, the higher the percentage of tax you have to pay. It goes all the way from 4% up to 8.82% in New York State. FICA taxes are taken out, and they're composed of two different things. OASD, which is Old Age and Survivors Disability Insurance, but most people refer to it as Social Security. And then Medicare, which funds health insurance for the elderly Americans 65 and older. How much is taken out of your employees' paychecks to fund these two things? Well, for OASD, it is 6.2% of their first $132,900 of earnings. That number is as of 2019, and it tends to go up every year. The percentage stays the same. It's usually 6.2%, but the amount of your income that they tax keeps going higher and higher and higher every year. For Medicare, it's 1.45% of an employee's first $200,000 of earnings, and then after that, it actually goes up to 2.35% on all earnings above $200,000. Both of these are for single tax filers. If you're married or not, it changes how much of your income is taxable, but for the sake of simplicity, we're going to just say that everybody that we use here is single. I don't want you guys having to worry about marital status, filing status for taxes. So that total, 7.65%, gets taken out of employees' paychecks each and every period as long as they make below the OASD limit. They call these the matching taxes. Why? Because whatever amount of money that is taken out of an employee's paycheck for the FICA taxes, the employer, the company, has to match. So if an employee gets $100 taken out of their paycheck for FICA taxes, the employer has to match that $100 and also send it in to the government. There is one exception to this, though. There's that what they call the bonus rate on Medicare. For people that make more than $200,000, it goes up to 2.35. For the employer match, it never increases. So the employer continues to pay 1.45% on all earnings. It never goes up to 2.35.